Welcome to the Deep Dive. Today we're getting into Vedanta Limited, VEDL, a huge natural resources group. And it's facing this really profound valuation disconnect. Our sources, well, they lay out a complex picture. Really strong operational performance versus some pretty serious corporate restructuring risk.
That's exactly the puzzle we're looking at for you today. You see, VEDL is trading under what analysts often call a conglomerate discount.
Right. That's when a company is just so big and does so many different things that investors kind of struggle to put a fair value on it. They penalize it.
Precisely. They apply a market penalty. But here's the kicker. If VEDL pulls off its big restructuring plan, that penalty could just vanish.
And that unlocks potentially massive value. We're talking, what, a 45% potential upside for shareholders? That's the number everyone's watching?
That's the potential prize, yeah.
Okay, let's try to unpack this. Maybe start with their recent results. Q2 FY26. Operationally, things looked, well, quite strong, didn't they?
They did. The core business showed real underlying strength. You saw EBITDA grow a pretty healthy 12% year over year, mostly helped by good LME prices.
And this is a giant operation we're talking about. They're India's biggest aluminium producer.
And fifth largest silver producer globally. Yeah, the scale is immense. And what's interesting is they're not just sitting still. They're pushing into future stuff too, like glass substrate, semiconductors, big plans.
So why would the market ignore that kind of operational strength? This is where it gets really interesting, I think, despite that strong EBITDA number.
Which tracks performance before any funny business, any exceptional costs.
Right. Despite that, their profit after tax, the actual bottom line number, it fell sharply, down 38% year over year.
Yeah, a huge drop. And it was entirely non-operational. It boiled down to recognizing about 1,547 crore in exceptional losses during that quarter.
Ouch. So that really hits the quality of the earnings, doesn't it?
It does. It signals volatility, risk, the kind of underlying risk that comes with this complex structure they have.
Which brings us neatly to why they're trying to change that structure so fundamentally, the demerger mandate.
Exactly. The core strategy is segmentation. Break VEDL up into 5 distinct, pure play listed companies.
So separate listings for aluminium, oil and gas power, etc. The idea being to kill that conglomerate discount for good.
That's the plan. And for shareholders, it's quite straightforward. For every 1 share of VEDL you hold now, you'd get 1 share in each of those 5 new companies.
Simple enough.
Yeah.
But for this to actually work, the parent company needs to be stable, right? Vedanta Resources Limited, VRL.
Absolutely crucial. And they've made moves there. VRL has proactively cut its gross debt by over $4 billion since FY22.
Okay.
And they've refinanced debt, pushed out major repayments until FY27. So on paper, that gives VEDL the stability it needs.
Stable enough to push ahead with that massive $10 billion CapEx plan they have.
That's the idea. It gives them the runway. And that CapEx is mostly aimed at boosting output, aluminium specifically, and getting serious about those semiconductor ambitions.
Okay, so the foundation looks somewhat solid. The potential reward is huge, that 45%. But you said it's not priced in yet, which means we need to talk about execution risk.
Exactly. The market just doesn't seem convinced they can hit their timelines.
Yeah, the self-imposed deadline for this demerger is already looking shaky. The NCLT hearing, that's the National Company Law Tribunal.
The key legal step, yeah.
That hearing's been deferred, pushed back.
Right. And it's not just paperwork. The delay points to some serious regulatory friction. You've got SEBI raising procedural points, sure, but also substantive concerns coming from the center itself.
Substantive concerns like what?
Well, allegations about potentially concealing information, liabilities. It's led to the center requiring VEDL to issue a corporate guarantee to the Ministry of Petroleum and Natural Gas.
So this digs into governance scrutiny. It's not just about splitting assets, it's about addressing these deeper concerns.
That seems to be the main bottleneck right now for getting that NCLT approval, addressing these governance issues head on.
Okay, so tying this all together for you listening, what does it mean? Well, analysts see the potential value unlock, definitely. But if you look at the median 12-month target price,
it's only slightly above where the stock is trading right now.
Which tells you the market is applying a heavy discount, deep uncertainty about whether this demerger actually happens smoothly.
Pretty much. The stock's path from here seems less about, say, commodity prices going up or down, and much more about corporate governance. Can they clean this up? Can they achieve that final, decisive split.
So that's the key catalyst, isn't it? What needs to happen for the market to finally believe in that 45% upside?
Successful regulatory clearance, it's not just a rubber stamp.
No, it feels like a real test case. Can this company navigate and actually resolve some pretty significant governance questions within the Indian market? That's the big question mark hanging over it all.